All right, it's gone. Well, hello everybody. Blair Nightingale here, back at you. Market Monday, 6 o'clock, ready to roll. Got some stuff I want to show you today, man. So it's a good day to be here for this one because we're gonna get practical. I'm gonna show you some tools here. We're gonna do a market update. We've been doing this a lot lately as we've just had a very news-driven market. News always plays a role to a degree. It's not how we primarily make decisions as traders, not just investors. Two different skill sets, but there certainly is a lot of news. So we want to sift through that with you. Of course, if you're joining us here tonight, we are happy to have you with us. We've got Facebook friends, YouTube friends, as usual, joining us. You can always drop a comment right there in the comment box, whether you're joining us on Facebook or YouTube. You can always drop a question. Just say hello. Let me know who you are, where you're from. Have you been here before? Is this the first time? I know we're going to have some friends out there who are also watching by recording. In fact, we know that most of you come back around and a larger part of our audience see it on the recording. However, those of you who are here live get the opportunity to interact with me live. And of course, I'm happy to hear from you. So go ahead and drop that in the comment box as I am moving through tonight if you have anything you want to give a shout out on. Thank you guys for being here. That said, all right, let's take a look here. So here's the thing this week, guys. This week is Fed week, okay? So what's the big thing that has been really in the news cycle now for a year and a half, where it's just become, I want to say, the obsession of the market, but it's just a real factor when it comes to what's happening in the markets. And we've talked about this at length here on Market Monday. I won't necessarily give the full breakdown tonight, but we've got the Fed. The Fed is coming in and raising probably interest rates this week. The market overwhelmingly seeing a probability that they're going to raise the rates another quarter basis point, which means those interest rates are going up. You talk about loans, right? Credit cards, all this kind of stuff. Rates going up again. The reason they're doing this is a part I'm not going to deep dive on tonight because we've done it a lot here on Market Monday. But the reason they're raising rates is to what? Tamp down on inflation. Let's cool the economy down a bit. So the market is moving higher, looking at, hey, it looks like the move down on inflation, right? The pressure to bring down inflation is actually working. Okay. That is causing the market to be excited. That's why you're seeing these bigger upward movements. Look at this. Since down here, this is the S&P 500. Okay, here we are at March 13th. Let's go even further out. Back here, you're in October of last year. So not even a year out yet. Okay, we're at 3,500 approximately. And now we're at 4,500, just a little over. Now that's a big increase. Two reasons. One, optimism. Okay, the economy is still strong, and that's why the interest rates have gone up the way they have. Now, obviously, the market was absorbing that interest rate change, right? When we had very, very low interest rates, and the Fed did the fastest rate hikes in history. But the optimism, the fact that the market, the economy still strong, which is part of the reason that we've got inflation. It's overheated to a measure. But also tech got killed in 2022, and it's seen a pretty significant bounce, right? Some of those big stocks have come way off of their lows. And even though some of these S&P 500 stocks have come off the lows, you see a lot of these NASDAQ stocks and some of the big tech stocks that were way further down, and they've really taken a bounce. Here's the question, though. Are we looking at, I even just read an article today that this is the biggest short squeeze we've ever seen, right? Right on CNBC. Short squeeze meaning that short sellers are having to cover their shorts, cover them from shorting stocks because the buying has got too hot. Basically, what that means is twice as much buying is going on as buyers buy, but short sellers also have to buy and cover their short positions. Okay, so you've got really heavy buying And that's creating a lot of momentum here as well. What's the thing? Well, the thing is that for traders, whether it's a big short sell, short squeeze, it doesn't matter. We're just going to use the chart to tell us what we really want to do. And that's a different skill set altogether. But we're definitely seeing attention put on the Fed once again. And typically speaking, over the last year, when we've seen the Fed come out, Monday, Tuesday, there's been some exceptions in the last little while, but Monday, Tuesday before Fed, it's been more muted. It's been more sideways. I told our students today, probably not going to see a lot of action today. Okay. I have seen a little bit more where on the Tuesday, there's been more volatility. There's been more selling. The Fed meeting will be on Wednesday afternoon. It's always on Wednesday afternoon that they make the announcement. Okay. They're going to announce the changes that they will or will not make, expected to raise rates another quarter basis point. And then, of course, Powell will come out and give a statement. Wall Street will watch that word for word and see, what did he change? Did he change anything? Did he not change? Did he change? They're reading into everything here. And what they're really looking for is to say, hey, maybe we got one more hike coming and that's it. We're going to slow down. We're going to pause. Maybe we're not ready to cut yet, but we're going to pause, right? How positive does Powell think things are? How negative does he think they are? This is what we have to watch for from the Fed. You and I can do that without going out and try to analyze everything that the Fed says and does. What you and I can do is stick with the chart, because all we really want to know is how Wall Street is responding to this news anyway. So if they are selling, great, we're going to see that. If they're buying, they're going to see that. Now, probably going to see a burst of volatility, up and down, wild swings when the news comes out on Wednesday afternoon. Not the best time to be getting into brand new positions. People ask me, Blair, will you trade on a week like this? Blair, should I even get into anything on a week like this, right? Because of the expectation of that volatility. You know, right now, there was a time where Fed, especially when they first started talking about raising rates, that was very volatile and it sent the market quite a bit lower. We've kind of gotten used to this cycle, right? The market has already fully, I would say, essentially priced in the fact that they highly expect that they're going to raise rates. Markets get volatile and really shift, I'm going to say, violently when they're surprised by information. Surprised, okay? It's not that it was just announced in the news, but they're actually surprised. And so when there's a surprise, then the price has to fluctuate to adjust for that new information. They're anticipating that the rate gets raised anyway. If the Fed came out and didn't raise the rates at all, that would be a surprise, okay? But they're expecting them to do it. I expect them to do it. I don't see any reason why they wouldn't. They've said they would. And so we can anticipate that this week. As a trader, that's something you want to pay attention to. You want to know, when are the Fed meetings? I'm going to show you a couple of things tonight that can help you stay on track of some of these news events as a trader, because this is going to be things that are just going to keep coming up over and over again. Of course, the Fed is one of those things. Now, here's the thing. Sentiment in the markets has shifted a little bit. I'm going to go to a weekly. No, let's go to a 3-year chart here. Okay, I'm going to zoom in here. We're coming up. I'm going to move this horizontal line right up into here, this line, right? We're coming up into that about 4,600, 4,650 level. You know, this has come well off the lows. It's been trending up. It's got a nice steep climb to it. Like I said, some people say this is a big short squeeze. We're still in trouble. But there is some sentiment shifting on Wall Street. Some of the bigger banks starting to talk like, you know what? The Fed may pull off this soft landing. Yet, soft landing meaning they've raised interest rates and didn't trigger a nasty recession. Part of the reason that I've spoken at in length is regarding the fact that we've got such robust employment. We just haven't seen the kind of financial pressure in our economy that we might normally see under the conditions that we've been traveling through. I have other thoughts to give on whether or not inflation is really improving. friend of mine who's a very good trader and certainly understands the markets and economics well, cited that even though some of the overall inflation numbers are coming down, some people, regular folks, regular Americans, there's certain areas of their budgets that are still way over. So maybe overall, what the metrics are measuring is coming down. There's still certain things that impact everyday Americans significantly. They're still very high. Okay. So is that really as much of an improvement as they say? Again, all of this stuff, very interesting, good to know. But ultimately, what I really want to do is go over and look at the chart. What is it doing? 20-day average, 20-day average, 20-day average, 20-day average, right? So up here, looking for either a move into the 10-day or back down into the trend at the 20-day moving average. But I got to see what happens with Fed first. So back to my question. Would you get in on a week with Fed? Well, again, further into this cycle where we are now, I'm not seeing the same amount of volatility. What I tell people is if you're going to get into a position, obviously understand your system, why you're taking that position. Make sure that is very, very clear. What is the premise of your trade? What is giving you an edge in that trade? We don't want price action. We want price edge. Price action happens all day, every day. That's not what we're interested in. What we're interested in is price edge. It's different. You need a system, you need to define it, and then we follow that system. Another thing we can do within that system is lower the amount of risk. Don't take as much risk when there's a higher volatility expectation. News does not tell us market direction. We would all love if we could just analyze the news and somehow get market direction. It doesn't work that way. What it does give us is a measure, a gauge, an expectation of the volatility. When we know there's big news items coming, that expectation of volatility goes higher. And us as traders, it's our job to manage the risk in that environment, which of course is why some people ask, Blair, are you even going to trade in this? Or should we, students will ask, should we even be trading in this? And I will say, if you're brand new and you're just working through the system and you're doing virtual paper trading, that's something, if you've never done this before, paper trade, learn some things, learn what you know, learn what you don't know. That's the purpose. You're not going to lose any money doing that. If you're trading with real money, then you just want to go in low, go in slow and understand, how do I really manage risk? If the market blows up and goes up, if it breaks down and falls significantly, my opinion, it's all it is. It's my opinion. I don't see the market being that surprised by this. Okay. I'm not saying the market won't move late Wednesday or Thursday. I'm just saying I don't think it's going to be this huge surprise unless, the Fed wants to throw us a big curveball. I'm simply saying if they come, say the same old, very, very, what's the word I'm looking for? Sanitized language that they deliver almost every time, and they do exactly what they're expected to do, raise a quarter basis point. I don't necessarily expect fireworks, but if it happened, it can go for or against your position. It's just that simple. So you want to know that in a higher volatility environment, perhaps you manage the risk by, as they say, our position size is the first stop out, right? We can lower the position size to control some of that volatility. Okay, that's an important thing to look at. So these are some tips and tricks. There's some other things that we can do that we teach our students all the time. Hey, this is a simple thing you maybe haven't thought of that give you some flexibility so you don't always have to say, I'm going to trade or I'm not going to trade at all. There is some things you can do to give yourself a middle ground there where it's not such a binary decision, right? Again, news doesn't tell us what the direction of the market is. It tells us the level of volatility that we can expect that may be unusual. Fed raises that expectation of volatility. Another thing that raises that expectation of volatility is earnings. Okay? And you're going to see, I believe it's 30% of the S&P 500. It's 500 companies, 30%, right? They're going to be reporting earnings just this week. Started today, obviously, but we're going to work through the rest of the week. That means many companies. Let's go in here. We're going to look at Meta. Okay, it's just an example. Meta, I'm going to zoom it in. Look at this. Meta just got crushed last year. Here we are back November 3rd, down at 86 bucks. Now we're over 300. Okay. That's a big climb. That's a big climb for Meta. So crushing right now, pulling back. But look at this. Earnings, July 26th. It's got earnings coming up, right? Google's coming up. Microsoft. Let's just jump over there real quick. Microsoft. So 4 times a year, every publicly traded company is required, right? Not expected, not advised, required to announce their earnings, certain information to the public. Why? It's a publicly traded company. Okay, so notice the 20-day moving average there, the white line there. Looking at this guy, not a half bad uptrend here, a little bit wild here in the last few days. Why? Earnings is coming up. One way that Wall Street will manage that volatility, sell the stock. They'll offload the stock before earnings, right? We're talking about long-term investing there in many cases, but not always, right? There's traders and there's people long-term buy and holding. So there's different approaches to what they're doing. But for you and me, we're looking at earnings and going, okay, that's a volatility event that is high volatility, far too high for us to really be able to manage the risk in a meaningful way as a trader, not an investor, different trader. So we're not actually going to stay in this in our community. We're not going to stay in the stock over the earnings report. And in many cases, we're not even going to trade it in the days leading up to the earnings report. But you will see a lot of earnings out there. So make sure you're checking, okay? If you're on Charts by Tradeway, it's right there on the chart. You may have it on your charting software. Of course, if you don't, I want to show you something simple. In fact, this is good to have regardless of what you're doing. I'm going to remove that from the screen, okay? And I'm going to, let's pull up another tab here. I want to show you this guy. Here's a website some of you may never have seen, earningswhispers.com. We are not connected to them. I don't endorse them in any official way. It's nothing like that. It's simply an online resource. In the top, I'm going to go to calendar. Click on that. You'll notice, obviously, a calendar pops up. Monday, well, Monday's come and gone. Let's go ahead and check Tuesday. Now look at this. Before the open tomorrow, 59 companies, 58 after, okay? 70 and 133 on Wednesday. It gets even higher on Thursday, 139, 121. So lots of earnings, okay? You got this banner here of some big companies there, but I'm going to go ahead and I'm going to click on Tuesday. What happens? Okay, it pulls up the list of companies that will be reporting on Tuesday. Good to know. Okay, good to know. Now, I already told you in your software, if it's Charts by Tradeway, you've got this stuff right there. But this is helpful if you want to double check an earnings date. Okay, if you notice a check mark on here, that means it's verified. The date is verified. So as I go down, I can see lots of big companies that I'm well aware of, right, as I go down. And of course, as I said, there's many that are reporting this week. So you can see that. Of course, you can always go back to the main page and then you can just search the ticker right here. We could just click Meta or whatever we want and it'll pop up right there. So just an interesting resource, not something, again, that is connected to Tradeway in any specific way, but it's an interesting tool to be able to go out there and just double check on things. And that's something that I want you guys to be able to have. So when I go back to here now, okay, let me make sure it's on. Yeah, it's on the screen. As I go on here, I wanted to let you guys know, I'm just going to show one of these right now. I mentioned a few weeks ago, we had a lot of financial earnings coming up and they did pretty well. Okay. You know, it wasn't a blowout in every instance, but pretty well. Well, the S&P 500 is broken into 11 different sectors to show broadly the U.S. economy. If I go to my homepage here on Charts by Tradeway. I've got my heat map, and then I've got the 11 sectors right here, broken up, and I got it on my heat map here to show me what the market cap is of each of these sectors and what the leaders are in each of these sectors. So I've got technology, and then I've got industries within that. Hardware did really well today. Excuse me. You can see Apple in here with this enormous, I apologize, guys, this enormous market cap. So I can click on that and go ahead and investigate. But the point is, you can actually see that there are 11 sectors. This is breaking up the US economy. Well, here's the cool thing, guys. You could come into the chart and you can actually look at what's called the sector ETFs from a specific ticker. I've got a few up on here right now. Let's go ahead and look up the energy. Look at this, energy sector, right? Energy select sector SPDR ETF. So I can open that up, and it opens up the XLE. This is I got to zoom in here. This is a snapshot of the energy sector. Now that's kind of messy. I'll zoom in a little bit more. Right, there's the energy sector. I can go here, XLF, financial sector. Now remember I said a lot of the financial sector just on earnings, they did fairly well. It's reflecting here. It's nice to be able to go, hey, what industry, what sector is my stock in? Why don't I go look at that as a whole and see where that's at? This is something we help our students learn how to do, layer these different pieces so they can have more alignment when they look to take specific trades. Here is, look at that. That's the the technology. I'm going to move this. The technology ETF. Okay. XLK. I don't know why it's not XLT. It's XLK. But it's actually, look at this, guys. Back here, December 21, right before 22, when this thing really started to fall. It's gone beyond that. Are they really in a better spot than they were at in December of 21? Well, Wall Street seems to think it could get there and hold there as far as company earnings goes, and they've pushed this thing higher than that already. It's actually pretty amazing to see, right? Pretty amazing to see from 112 to 180. Okay, but I want to show you this last thing. Where can I go and really learn about these and look at these? Well, of course, I'd list them all off for our students, but I'm going to open one more tab for you. I keep closing and opening just so I can share these with you. Very quiet in the chat tonight. I'm going to say hello. I'm going to open this up. Usually we got a couple of people chatting us, unless my chat function is not working. Oh, it looks like we do have some comments. Oh, interesting. I'm sorry, guys. It looks like there was an update here on our streaming software. And so the comments were in a different section. So I actually did not see that. Excellent. Okay, so Mercy is with us live on Facebook. Excellent. Thank you for being here. John, first time live listening in Florida. Awesome. Great. Thank you guys for being on here. Ruth. All right, now we got some people coming in. I was going to say, that is not typical for us here on Market Monday. But there you go. I was just in the wrong spot. Okay, so I'm going to share my screen one more time. I want to show you guys this. Here's some good things for you guys to take down. Specifically, here's a breakdown of those industry sectors, or excuse me, those S&P sectors. Okay, they're all reflected right here. Okay, and I can actually go and see what's actually included in each one of them. And not only that, but what is the percentage of weight that each one of them gets in the S&P 500 index? It's very interesting, okay? Here, estimated weight of the XLC is 8%. But check this out. I'm going to keep going. 4%. XLF is worth 12% of the weight. So they don't all get an equal vote. Now you can see it moving around the pie on the right there. Look at that. Technology is actually worth 30%. 30%. Okay. So that's very interesting to see that. It's much more heavily weighted. And you'll see that when you look at the top 5 stocks in the S&P 500. So this is an interesting resource for sure to be able to look at. Joseph says, we're here just listening, right? Awesome. First time Primo from Austin, Texas. Good to see you. Ruth, we're just listening to your soothing voice. Well, that's great. You know, I almost sound like I've got a cold or something like that. It's even a little bit different than normal, but I promise you I don't. So let's see. S&P seems too hot, Joseph says. Can't go against the bull. Okay, 2 very important thoughts there. Seems too hot. Well, seems, doesn't seem, right? We all have assessments of the market. We have reasons why. Can we really sustain this? Does it fundamentally make sense? Is there too many headwinds in the economy and we can't believe it's going up this high because it actually should be falling, but it's going up? You know, here's the example I'm going to say about the Fed raising interest rates. I was going to say this earlier. Think about if you slam 2 cups of coffee. Let's say they're cold. They're not even hot. They won't burn you, and you slam them really fast, right? 2 full cups of coffee. Maybe they're double strength coffees too. Okay. What does that do? Well, it's a stimulant. Caffeine is a stimulant. Okay. And it's going to stimulate the body. But when you take it in that fast, are you going to notice the effects right away? Are you going to notice the effects in 2 minutes, 3 minutes, 5 minutes? Well, you might start feeling that much caffeine in 5 minutes if you've got a really fast metabolism. But you're really not going to know at first, okay? But because you took it in so fast, when it hits you, it's going to hit you really hard, okay? It's going to hit you really hard. Now, that's a really dramatic example. Caffeine actually peaks 30 minutes after it is taken into the body, okay? 30 minutes in, you're going to feel 2 cups of coffee, like double strength that you slammed. That's stimulus. Stimulant, okay? What's a depressant? Alcohol. Alcohol is a depressant, okay? If you do the same thing, okay, but you do it with hard alcohol, we're talking liquor, okay? You say, Blair, what are you talking about? Why are you talking about this? It's a depressant. It's just an example. If you did the same thing and a person slammed that, would they know in a few minutes? Probably not. But give them 10, 20, 30 minutes and they're going to be severely inebriated. Why? Because it's a depressant on the nervous system. It's the exact opposite of coffee. In either instance, okay, the speed with which that was ingested, okay, like the chipmunk in the new Red Riding Hood. Yeah, I haven't seen that. Perhaps somebody else has seen that. You can comment. The speed at which it is ingested leaves a bit of a question mark as to how that's going to hit. Well, interest rates aren't totally dissimilar to my examples. Now, my examples are extreme to prove not to prove a point, to exemplify a point and how this can be, it can take an effect. But really, that's all they do to the economy, you guys. They stimulate and they depress. They stimulate and they depress. Raise interest rates, okay? Depress it. Lower interest rates, stimulate it. Print cash, buy assets with government money. Where does that come from? Where does government money come from? The government money tree? Well, that's what they seem to think, right? But actually, it comes from taxpayers. It comes from American taxpayers. Either way, that's how they stimulate the economy. They sent you a check and they said, here you go. Here's a check. Congratulations, you get your money back, right? Well, this actually cools and heats up the economy, right? So this is really how that works with the interest rates having gone up as fast as they have. Okay. It's going to be very interesting to see how that really impacts things over the long term. Maybe as calm and cool as some think. I don't know. We'll see. We'll see what happens over the long term. So Joseph says S&P seems too hot. From that perspective that I just described, I would say I think there's a lot of optimism out there that's very, very hot without a lot of clarity on where we're really going. So I have a question mark. I'm not as bearish as I was. I don't know how you can be at this point. However, I haven't fully gotten off that soapbox because I think there are still too many question marks in the longer term to see our economy hold up as well as it has. Is certainly looking at the stock market. Now, that said, um, yeah, Joseph's saying, didn't they recalibrate something, the weight of some of the stocks? And that happens, right? It doesn't stay the same forever. Okay. So it's always something you can go out on the internet and you can look and see how that redistribution happens. Okay. John says that the NASDAQ was recalibrated today. Here you can look specifically at these sector ETFs. Okay. These are specifically just ETFs that track. Now, the SPY, the SPY, comes from this same line of ETFs. And it's one of the most popular ETFs, if not the most popular ETF in the stock market, SPY, tracking the. Joseph says can't hear. Can everybody hear me? You should be able to hear me on here. I'm just testing something. Joseph was saying he couldn't hear. Can everybody hear me out there? I know a few people have been commenting. Let me know if you could hear me. Should be just fine. Yep. Okay. Excellent. So, there is recalibration. Things change, but the point is tech is big. Tech has a big. I see. I see. Yeah, tech has a big impact. Okay, not the only. It's not 50%, but it's pretty big. So that's something worth watching. It's good to have an understanding. Check earnings. What's the Fed going to do? Do I have a system? How do I get flexibility so that I don't have to go all in and all out? Well, you got to learn some tools, right? Some tools for trading. You've got to have a system. You've got to know, is this price edge or is this price action? Anybody can open a brokerage account and go out and chase price action. That's why people spin out burnout. Okay. You don't want to do that. You want to learn how to control yourself looking for price edge. Take advantage of that. Understand good math, good risk return, not complex math, but just good solid numbers so that you're not taking risk over time that doesn't actually serve your trading account. You can always, I say this almost every time, head over to tradeway.com where you can take our step one, start your journey class, right? Tradeway.com/events. And you will be able to take our step one, start your journey class. Come spend 2 days with us. If you don't love it, we'll give you your money back on the tuition. That's how confident we are. You'll learn the foundation for our stock trading system, get exposure to options, all kinds of good stuff that we do on there. So you can head over there and get more for that. Joseph says, I refreshed and still can't hear. Push the big red button. Good. Okay. I'm just double checking, making sure I'm still coming through. Perfect. Well, guys, let me take this off here. I appreciate you guys being on with me. Fed is on Wednesday, so we'll update next week, see where we landed. Appreciate y'all. Thanks so much for being on, and we will see you next time. Good night.